That sounds like 1031 and private equity got married and had a beautiful baby and they named it Opportunity Zones.
Welcome to The Alternative Investor, the definitive show for investors seeking private alternative investments. Here's your host, Matt Johns.
Today, I had the pleasure of speaking with Ashley Tison, founder and president of OZ Pros, a consultancy dedicated to guiding investors into Opportunity Zone funds and businesses. From the emergence of the Opportunity Zone in 2017, Ashley has become a national leader, helping investors, communities, and even elected officials develop Opportunity Zones to their fullest potential. Now, Ashley's background positioned him to be in the right place at the right time to take advantage of this new investment framework when the Tax Cuts and Jobs Act was passed. As a real estate and mergers and acquisitions attorney, he had a unique perspective to understand the legislation. Since then, he's shifted his professional work to focus on Opportunity Zones, and he's even advised over 1,500 investors, family offices, and investment advisors through OZ Pros. Beyond his consultancy work, Ashley is a sought-after speaker at national conferences and seminars. He's also a national leader, advocating for the positive community development they were originally intended to support. Now, I've learned a lot from Ashley, including during this interview. While the tax benefits tend to lead the discussion for most, he always wants to focus on the impact OZs have for their communities. Welcome to my conversation with Ashley Tison. I didn't realize you were a basketball player. Like, you played D1 basketball for Air Force, right?
Yep.
So this has got to be a fun time of year for you, right?
It's fantastic. Starting from growing up, my dad was on the first Final Four team at Duke. And I grew up with the game ball from the 1964 NCAA championship in my room, right? And I just thought it was normal. I was like, yeah, my dad played basketball in college and got drafted by the pros, and he just happens to have the game ball from the 1964 NCAA championship when Duke got beat by UCLA, right? When UCLA went on their streak. And at the end of the game, he was the one holding the ball. And, so as they walked off the court, he walked off the court with it. And
that's great.
If anybody's listening, don't call me because I don't have it anymore. But so, growing up, I grew up in Indiana, and, March was always fantastic. Well, my senior year, we went to the Final Four. 35,000 people in the Hoosier Dome. I mean, so March has definitely got a huge place in my heart. And then had the fortunate opportunity to be able to play in college at UNC Charlotte. We went to the tournament my sophomore year and my senior year. Unfortunately, we were not a Cinderella story. We got beat first round sophomore year and second round my senior year. But hey, just to have even been there.
That's awesome. That's great.
Yeah, it was awesome.
I mean, but it's kind of cool to go back and look and say, that was me on that bracket. That was me. I had myself going to the championship, but that was still me.
Yeah. Well, yeah, that's a part of the problem, right? Is that we didn't have ourselves going to the championship. That's what we should have done. We should have envisioned that, right? That bracket at the beginning of the season, and then maybe it would have manifested. But yeah.
And then after your basketball days presumably ended, you moved into law school at that point.
Yep.
And you graduated law school and you pursued a career as an attorney for a while there. It was an M&A and then real estate for the most part, it sounds like.
That's right. So I was a big firm lawyer, right? And after it had sufficiently sucked my soul, I I decided that I wanted to do things that that had impact. And so I set up an impact investing company when I went to go be in-house counsel for a commercial real estate developer and tenant and common syndicator. So I got to kind of do the best of both worlds, where I got to do on-the-ground real estate stuff, but then I also was able to do some complicated syndication type deals where we distributed that investment product through a network of broker dealers and got exposure to kind of the RIA broker dealer network. And then when commercial real estate crashed, I was like, man, I'm really glad that I got a law license. And so I ended up having to set up my own shingle and started doing, I got a sell side transaction. And I was like, wow, I really like this M&A stuff for the smaller folks for kind of Main Street America. I had done it at the big firm, but I was always involved in like $1 billion transaction with really complicated documents and stuff like that. And so I said, and I think that a lot of business ideas start this way with a what if. And I said, what if we could take that Wall Street level sophistication that I was used to and bring it to Main Street America? And so we set about doing that. We created a software system that had a really great set of documents. And then we put together this system where we didn't represent either the buyer or the seller. And it worked out really well, so much so that I was able to sell that practice and so that I could focus on helping business owners keep more of what they made. And help them with succession planning, with, really talking and focusing on their purpose. And then, also to get intentional about mitigating the taxes on the transaction. And then surprise, surprise, nobody really wants to talk about succession planning, and they certainly don't want to pay for it. And so when I found about opportunity zones, I was like, that sounds like 1031 and private equity got married. I might want to check that out.
Well, that's what I was going to say. Immediately, like when the Tax Cuts and Jobs Act came out, and there was this piece in there about opportunity zones. There was some discussion about it in the news. I had kind of heard a little bit about it, but it seems like it was real nebulous. Nobody really knew what was going on. But I think you jumped in kind of really early on that, right? And you recognized something, and I can see now how you were uniquely positioned to have that kind of perspective. But you jumped on it. What did you see at the beginning, and what were you pursuing? What was it like at that early day?
I was actually at a CLE, and I heard this guy talking about Tax Cut and Jobs Act and to your continuing legal education.
Got it.
And so I ran him down afterwards, and I was like, "Hey, man," I was like, "that sounds like 1031 and private equity got married." And he's like, "And they had a beautiful baby, and they named it Opportunity Zones." And so I was like, so I literally ran back into the CLE. Everybody is like kind of like dazed, they're not paying attention. I start taking down domain names because I was like, I think that this is going to be a big thing. And then I called my old team from Gemini and the Tenant and Common Syndicator. And I was like, hey, let's pop up a website and let's just do kind of a market test. And in 2 weeks, we had 150 inbound leads, $75 million worth of capital that were looking for deals. And to your point, there were lots of people that were kind of interested in it, but nobody had really figured out the process of how you actually did it. And so we then did a deep dive into that. And we said, hey, listen, I think that there's going to be an opportunity here to take this really sophisticated tax mitigation tool and bring it to Main Street America. Let's make it available to the entrepreneurs who are the backbone of American economy. So we repurposed that document system that we had done for M&A. We basically did the same thing to kind of become the legal Zoom for opportunity zones. And I think that we've probably set up more captive qualified opportunity funds than anybody in the country as a result. And, that's what our mission is. We want to make it so that everybody can have access to this really powerful economic development tax incentive. And that's what it's really about. It's about doing well by doing good. By very definition of investing into these areas, you are assisting, helping to change the dynamic of inequities inside of place.
Yeah, and that's perfect. So before I want to dive into that in a minute here, but I want to get a high level overview just so we have a baseline. What are opportunity zones? What are the benefits? How do they work?
Yeah, so they were created, once again, by the Tax Cut and Jobs Act. And Congress allowed each governor to designate up to 25% of their low-income census tracts as opportunity zones. And if you're in an opportunity zone and you have any kind of capital gain, that's long-term, short-term, it could be from real estate, crypto, business sale, it doesn't matter. You can take that capital gain and you can put it into a qualified opportunity fund, which once again is just an LLC taxed as a partnership. And then that's going to defer that gain until December 31st, 2026. And then once you've held that new investment for 10 years inside of your fund, you then are eligible to get a step up in basis to fair market value on everything that the fund owns. And so what Congress then, has effectively done is that, number one, they got the attention of private capital. Number two, they got it off the sidelines via this, because you got to get it in by December 31st, 2026. And then number three, they made it patient. which no other economic development incentive program has ever done, and certainly not to the extent that they've done here. And the reason why is because private capital realized that, hey, I can, by just putting my money into one of these deals, I can not only eliminate capital gains, but I can also eliminate depreciation recapture. And that being that 1-2 punch, man, that makes this thing extremely valuable as a tool in your aggregate tax mitigation toolkit.
But it has to be through these qualified opportunity zone funds, right? So there has to be
Correct.
an actual vehicle, and it has to be within these qualified opportunity zone. I guess they're just called the opportunity zones that are designated by the states through the federal government, or maybe vice versa. How does that work? How does that process work of designating a certain area?
Yeah, so once again, the governors got to designate them back in 2018, and the zones got designated. People ask me that all the time. Hey, this should be an opportunity zone. How do I get it designated? And the answer is you can't. Unless we get new legislation, which they're working on, which they're wanting to make it so that there's going to be a rolling designation where the governors get to redesignate them like every 5 to 10 years. But until we get that legislation, right now the zones are set. If you go to ozpros.com/map, you can search all 8,700 of them. There's 8,700 of them around the United States. There's one in every state, in every county, and in all of the territories. Pretty much the whole island of Puerto Rico is an opportunity zone. And so what that allows you to do, and this is the simple way to explain it, you take your capital gain, you set up an LLC tax as a partnership where you've got specific bells and whistles inside of the documentation, which is what we do. You drop your money into that fund. It defers that gain until 2026. And then you've got between, a year, and you got basically 3 to 4 years before you actually have to deploy the capital. So it gives you a really long lead time to be able to do your project. And as long as your project is in the zone, whether that's real estate or an operating business, it qualifies for that ultimate step up in basis to fair market value, which eliminates taxes.
So anything operating in that qualified opportunity, or in that opportunity zone, can qualify for a qualified opportunity zone fund, right?
That's right. Now,
then,
you got to make sure that you follow the rules, right? And you want to make sure that you got a professional that's advising you on it. But yes, we can pretty much make anything work. There's a couple of nuances of stuff that doesn't work. So like a stock trading company, that doesn't work, right? You got to actually be doing something in the zone. And then to the extent that you're doing real estate, it either needs to be original use, so that means it's new construction, or it needs to be substantially improved, which I could go into the dynamics of that, but it's probably a little bit deep for what we want to get into. You basically have to double the basis of the value of the building itself. You get to exclude the land value.
No, that's a terrific short explanation of that too. But okay, let's talk a little bit about the value of this to the communities that they're getting capital, because capital is being injected into these communities that have been designated as either low income or needing some kind of improvement, I guess, based on whatever the governors thought at that time when they designated back in 2018. So what kind of results are happening right now? What are the expected results from this 9-year sort of experiment?
It's been nothing short of amazing. And, at the beginning, and I understand why it kind of shook out this way, so this is not, Trump did not come up with this legislation. This legislation was created in the Clinton era, and it took them that long to ultimately get it passed. And it got passed based upon a conversation that Trump had with a senator from South Carolina. And he was like, hey, listen, he's like, how can I, kind of change, how can we best impact like low income areas? And Senator Scott said, opportunity zones. He said, you need to put this legislation and get it through. And so at the last minute, they snuck it into the Tax Cut and Jobs Act. And they said, okay, arguably this is great, but there's a lot of guardrails around it. Let's knock the guardrails off and we're good to go with it. And so that's been one of the criticisms, is that this is a way for the rich to become richer, and that there's not enough like economic development, requirements and that kind of thing. And I actually agree with that. And the new legislation is going to put some reporting requirements and some purpose requirements inside of it, which I think will be great. But The results are undeniable. We're talking over $150 billion worth of capital has flowed into these areas.
Wait, 150 billion.
Yes.
And this is money that would never see anywhere near these areas typically. I mean,
right.
Gentrification is happening, but not to this degree, right?
And that's the key too, right? Is that this isn't about gentrification. This is about investing into the communities.
Mm-hmm. Yes.
And so we've seen that happen. And the statistics show that areas that are kind of similar, right? So census tracts that are low income, that are, one was designated in OZ, one was not designated in OZ, home prices are significantly higher in the OZ than they are inside the kind of similar non-OZ tract. And there's other types of stuff relative to just like obviously invested dollars into those areas too. And so the program absolutely works. Now, is it the best that we could do with it? No, that's why we're kind of trying to come up with 2.0. One of the challenges is that you have to have a capital gain in order to participate. You also can't contribute land into a deal like the way that a lion's share of development deals are done. And so we're trying to fix that in the next round of legislation so that we can really turn this thing into something that has, I think that it's already had generational impact. I think that it could literally change the palette of economic development, progress, and incentives and that kind of thing, for history.
Ashley, give us some examples. What are projects that are happening in these communities that are causing this economic boom for a lot of them?
So, I've done a ton of real estate projects.
Uh-huh.
I had a guy that he set up a flex industrial building. He created a QOZB, an opportunity zone business that provides the back office services for home services companies, accounting, call center, scheduling, that kind of thing. And then he attracts, folks that would otherwise not have that and can't crack that 3-truck glass ceiling. He brings them in, he gives them the services to be able to pass that. And then on the good ones, he makes lead investments from his fund. And so he's created this blue collar accelerator in the middle of an opportunity zone. And he's been able to take some of those blue collar businesses that probably would have gone under off the silver tsunami. So we've got a lot of baby boomers that are aging out, and ones that probably would not have been picked up. He's been able to coordinate getting those into his accelerator, getting somebody that otherwise wouldn't have had access to that, getting them into those businesses. And it's been an awesome, raised bed experience for them. And that's just one. I've got folks that are doing, vertical farms to challenge food deserts. We've got folks that are doing autism communities that are serving, autistic folks. We've got, bamboo farms. I helped a group buy a bakery inside of an opportunity zone. I've helped folks buy businesses and move them into an opportunity zone. So the possibilities are literally almost limitless, with a couple of exceptions, right? Based upon, if you're in the financial services world, those are tough to make opportunity zone businesses because of the restriction against non-qualified financial property. We're trying to work and to navigate through that. What we don't want is to make it so that people can, have a stock trading company and just have a headquarters in a zone and now not pay any capital gains. But what we do want is we want people that are actually bringing high-paying jobs to locate those inside of an opportunity zone, because that's what positively affects the neighborhood. And so, anyway, I'm really excited about what I think the OZ 2.0 is going to bring about.
You should be, because it's more than bringing jobs into the community. You're talking about injecting capital that's helping improve buildings and improve, different structures in the place. But it's also improving, bring commerce and things like that into these communities to help churn that capital a little bit more among the folks who arguably need it the most in our country.
So that's the fundamental concept of economic development, is that all activity is good activity. Even if it's just somebody driving through, injecting outside capital into that community is extremely vital for that community. Mm-hmm. And then when you look at, and once again, Trump, whether you love him or hate him, what he did within the opportunity zone legislation the first time around, and what they are implementing right now, with the Office of White House Revitalization Council, he went to every cabinet member and he said, I want you to incorporate opportunity zones into your programs. Anytime that there's kind of a preferential point or whatever, I want you to give special dispensation to opportunity zones. So what they became this fulcrum, this inflection point for all of these kind of previously disparate governmental organizations. And they became a rallying point for all of those organizations to work together to leverage the programs that are out there, and then to partner with private industry in order to make it even that much more powerful. And I think that was the most exciting thing about OZs that we are going to see happen with this new legislation. And it's going to be really cool to see that explode.
I love that. I love your enthusiasm for it too. Now you keep referring to we. Who is this we that's wanting these things? Is it we at OZ Pros? Is it we as an opportunity zone community? Who are you referring to?
So I'm talking collectively about the Opportunity Zone community. So I'm a member of the Novogradac Opportunity Zone Working Group, and we provide direct input to the legislators who are crafting the legislation.
Yeah.
And then I've got about 600 people in an Opportunity Zone network that's our online community. And that's what I'm talking about. We're talking about stakeholders who are actively using this program to positively impact their communities. And I've got story after story and person after person who've actually used this in order to, number one, save taxes, right? Because let's be honest, that's the hook, right? That's what gets people's attention. But then as you look at that, the impact that they've been able to make through saving taxes has been nothing short of amazing and life-changing, not only for the people that are getting the benefit of it, but for the people that are actively doing the work. And yes. I think that that's the power of altruistic programs, is that it changes the person that's actually doing it. And it's like when I go to volunteer, I know that we're blessing the people that we're serving, but at the end of the day, I'm the one that's being blessed the most.
Mm-hmm. No, that's a terrific perspective on it too, because I'm sure that a lot of people come into it for the financial aspect, but then they see the actual impact that it's having on people's lives, and that probably changes them in a way they didn't expect.
Well, and I mean, that's one of the things that I am really hardcore about, is that I'm like, hey, listen, what are you going to do good? How are you going to do good with this? Because if you're just doing this as a tax deferral, I'm not interested. I mean, you could probably go find somebody that could help you with that. But I want to know that you're in this for good reasons, and that you're in it for the right reasons, which is the basis of the legislation. And so that's what we do inside of our community. We have a weekly mastermind, and we go through rapid fire like strategies and different thoughts. And inside of that, we're always talking about the purpose. We're talking about the impact. We're talking about, the things that are happening that are good as a result of what folks are doing. And ultimately, they started out to save money on taxes, but at the end of the day, it's providing legacy. It's providing great stories, and it's providing that ability to be able to hand this off, to the next generation, which is also one of the other unintended benefits of OZs, is that they effectively become a poor man's irrevocable trust for purposes of freezing your estate value. It's another one that, nobody was really focused on, but then when you look at the effect of it, it's not the fair market value when you die, it's what you originally put into it. And so you get to freeze the value for your estate purposes at what you originally contributed into your fund, which is really powerful.
Yeah, and that's awesome. So let's go into the mechanics of it just a little bit. Maybe you can give a practical example of how this impacts somebody from a tax basis and from an income basis, maybe just for a standard real estate deal or something that you would see.
Okay, so let's say somebody had $1 million of capital gain.
Perfect.
And they're in a fairly high state tax jurisdiction like New Jersey. And so they take the $1 million, they come to OZ Pros, and we say, okay, we're going to set up your fund. We pop it up in 2 weeks, and we get that back to them. They set up a bank account. They take that $1 million, they put it into a bank account, and instead of paying $238,000 in January of the following year, they now defer that $238,000 until December 31st, 2026. In the meantime, we show them different investments that they can make out of those $1 million in order to further reduce that tax when they go to pay it in 2027. So you can invest into oil and gas. You can invest into solar. You can invest into real estate where you can cost segregation and do depreciation. There's a number of things that allows us to do to reduce the tax that you're going to pay in 2027. But the real kicker is that whatever your new investment is, so you take that $1 million, and then let's say that you're going to go and do a development that's like a $5 million deal, or even a $10 million deal if you could get that much leverage. You can now get the full benefit of the step up in basis, right? Let's say you're doing a $10 million deal. And over the course of 10 years, it better at least double in value. So it goes from $10 million to $20 million. Normally, on that $10 million of gain, you're going to be paying at least $2.5 million of taxes. Okay? Inside of an opportunity zone, it just went to zero on a state, on a federal level and on the state level for the states that haven't exempted out. And that's California, Massachusetts, North Carolina of all states. And I can't remember who the Mississippi is the other one, which is kind of ironic that North Carolina and Mississippi opted out. But you're able to eliminate the federal tax part of what your new investment is. So people ask me all the time, they're like, okay, how much capital gain do I need to have in order to make this worth it? And the answer is, it's not about how much capital gain you have now. It's about how much capital gain you're going to have in the future. And so if you're doing a deal that's at least $500,000, you're going to have it. I mean, it better at least double. So you're looking at $500,000 of capital gain taxable event, right? Which once again is going to be at least $120,000, $130,000 in taxes. And so there's no question, right? Even if you hired, if it costs you $10,000 a year to maintain this, you're still to the good if you're doing a $500,000 deal, because it's all about what the gain's going to be in the future. So if you're starting the next Facebook, if you're starting up something that you think is going to grow like crazy, you are crazy not to do it inside of an opportunity zone.
Okay, but this is all ending in 2026. Right now, let's say there's no legislation moving forward. It ends in 2026. If that does not move forward, all the deals that are done up until that point will continue for that 10-year term, right?
That's right. So that's the reason why you need to. So old Chinese proverb, when was the best time to have planted a tree? 30 years ago. When's the second best time? Today. When was the best time to have opened up a qualified opportunity fund? 2018. When's the second best time? Right now. Because if you have a fund, you can still do deals inside of that fund, inside of the zones, all the way till 2047. You just have to have your gain inside of the fund prior to December 31st, 2026. So you need to have occurred the capital gain, funded your fund, but then assuming that you can get leverage on that fund, you can continue to grow that fund all the way until 2047. So the timeout is about the gain, not about being able to do deals. And that's a common misconception. And one of the reasons why people are kind of hesitant to do it. And they're like, oh man, I just want to see what the legislation does. Who cares what the legislation does? It's probably only going to make it better. So go ahead and get it going now. So that way you start that 10-year clock. Now second best time to start a plant a tree right now.
Now, we saw that Congress, they seem to, in the budget, they recently passed, it looked like there might have been some room for this in there too. So you're anticipating something will go forward, you think?
No, I definitely think so. Even if so there's this whole like process relative to the budget reconciliation, whether it's going to be a 1-bill solution or a 2-bill solution. Even if it becomes a 2-bill solution, I think that we get action on opportunity zones. But the 1-bill solution will make it so that we get action earlier, and with probably a greater likelihood that we're able to get some kind of permanence and or some kind of rolling ability to be able to do OZs. And so we're really confident that with the way that things are shaking up, with the House passing their budget reconciliation process, and then with the Senate indicating that they're amenable to a 1-bill solution that the House is working on, we're anticipating that we could see legislation as early as Easter. And we are actively working through the Novogradac Working Group in order to try and get folks and the legislators to really be focused on this. And so if anybody's got, if anybody has interest, they need to be reaching out to their legislators to say, hey, we need to make sure that this gets done. And, that's one of the grassroots things that we're trying to accomplish too inside of that community. When I say we, that's the aggregate we. Hey, the more that we can get the word out about this, the more we can make legislators aware, the more probability that we get something that's really great, that is not only going to help people save money on taxes, but also create lots of positive impact.
Is there a tremendous amount of pushback from any side, one way or the other?
So opportunity zones are a bipartisan, bicameral, endeavor, and they have always gotten lots of bipartisan support. I think that the initial kind of response and the initial pushback was from some of the folks on the left that viewed it as a kind of a rich person's giveaway. Mm-hmm. And so I think that that's one of the things they're trying to tighten up, is to make sure that the money is going into deals that really need it, as opposed to deals that probably would have gotten done one way or another. And so I know that that's one of the things that the Republicans are sensitive to as well, because they want this thing to go and to encourage cash to go into projects that otherwise wouldn't be getting done, which is the whole point of this kind of legislation.
Is there anything else you feel like people need to know about opportunity zones or what it takes to invest in them?
Yeah, so once again, it's real easy if you want to do your own. You can also invest into other people's deals. So even if you do your own, you could still invest into operating businesses. We do boat and RV storage deals, and we're actually doing one right now. And the lion's share of investors are coming directly into our QOZB through their own QOF. And so they don't have to manage it. We've got a manager that takes care of the development and also the management of the actual operation of the business. And so I think that one of the things that people perceive is, it's just one more thing for me to have to do and to manage and to run and to spearhead. And that's not the case. If you want to put your money with a professional fund manager, you absolutely can.
Mm-hmm. Awesome. Well, Ashley, thank you so much. Love what you're doing at OZ Pros. So glad to have this time with you and chat and learn a little bit more myself. But how can we get in touch with you beyond this interview?
Yeah. So if you go to ozpros.com/podcast, we've got some specials there for your guests.
Nice.
They can book a call with me. We've got master classes available for different groups. We've got, ones for real estate brokers. We've got them for business brokers. We've got them for investment advisors, basically to educate them about why opportunity zones are important to them. Drop us a line at ozpros.com. Submit the information request form on there, or just send me an email at ashley@ozpros.com, and we'd be happy to touch base and help them to understand. That's our biggest goal, is to help people understand that these things are still alive, they're still really powerful, and that the time to act is right now. And then hopefully they just get it even better.
Well, Ashley, thank you so much. This is awesome. You're very accessible, and you do a great job with the education piece. So I'm very grateful for that.
Absolutely. Well, thank you for having me on. It's an honor and a privilege, and hopefully we've been able to positively affect your guests, and maybe somebody's going to, get the epiphany of like, man, wait, I could do well by doing good, and we'll help them do it.
Sounds great. Thanks, Ashley. Take care.
Cheers.
We hope you have enjoyed this episode of The Alternative Investor. If you found this valuable, please be sure to like, subscribe, and share. This show is brought to you by Honey Hive Capital Partners. Visit us at honeyhivepartners.com to continue your alternative investment journey. This recording represents the views and opinions of its guests and does not reflect the views and opinions of Honey Hive Capital Partners, LLC. Nothing in this recording, nor any communications from it, should be treated as constituting financial, investment, legal, tax, or other advice of any kind, or as a recommendation to buy or sell an interest with respect to any investment. We look forward to you joining us next time.